Hello and welcome to Bazaar Morning Call. I'm Prashant. With me, my colleagues Sonia and Reema is with us on the show as well. Guys, hi. Good morning. Starting a new week. Who was up watching the match? That's what I want to know.
You know, on days when they have such fabulous matches, the next day has to be a holiday. I mean, it's not possible, and it was exhilarating.
Did you watch it? Did any
yes, I did. I stayed
all
up.
the way?
Not through the way, but you know, the first part. I mean, it was exhilarating. There was no other way to explain it.
I saw the highlights in the morning. As soon as I woke up at 5 a.m.,
I did neither, but I plan to stay up today for the second semi-final, and hopefully that should be good. So
you know, the thing is that I mean, when this is of course Messi's last World Cup, right?
Yeah.
And the way he performed is mesmerizing.
Yeah.
They call him the magic man right now, literally.
But I felt a little bad for Croatia just because of the way they've performed in this World Cup. I mean, but you know, there are some games, like I said, the next day has to be a holiday so that you can catch some of these games.
If you see me all groggy tomorrow morning, you know what I did, right? There is, of course, the FOMC as well. So, I mean, later today, so I could be up for either the FOMC or for the second semi-final. But let's just quickly run you through the top stuff that I think one needs to watch out for. So, we had a very large equity rally last night. But by close, I mean, if you looked at the market in the US at about 9:30 our time, you would have found the S&P 500, the NASDAQ all up between 3 and 4%. You woke up this morning, barely 1% gains. I mean, actually, the NASDAQ is up 1, the S&P is up 0.75%. So what happened? I mean, before that, I mean, you had the CPI numbers, right? Before the market started rallying, you had the CPI numbers which came and they are slower for the second straight month. Second meaningful kind of slowdown we've seen. October was off. S&P that day rallied 5.5%. Of course, then did nothing for the next 1 month all the way till now. And then you had the November CPI last night, which has also shown that it's softer than expected, which is good news. Markets rallied, but they gave up gains. And that may be because the market got some pre-FOMC jitters. The FOMC is today, tonight, and you'll hear from Fed Chair Powell as well. Market pricing, by the way, is not changed. That is still 50 basis point hike. It's pricing for this month. There was also an article from the WSJ economics reporter who's kind of called the Fed Whisperer. He said that, the softer November CPI will not change very much. I think market took note of that as well. The risk is this, right? The risk is that in the press conference, you'll get the hike, but the risk is if the Fed chair does not endorse the market's dovish view, that there will be another downshift in the pace of hikes and then eventually there will be a pause. There will be, I mean, if you go by market pricing, there are cuts in 2023. What if the Fed chair pushes back against it? I think that is a risk which the market did not want to take. And I want to make this point that I think it is very good that the market is going into the FOMC not with 4% rallies. It's going with 1% kind of a move. It's a normal market move. And then, I mean, if you get a dovish kind of dovish commentary tonight, I think the rally then could be a little more durable and not like what we saw when the market rallied 5.5% on the 10th of November, one month ago, when the October CPI number in the US was soft. And then, I mean, the index did not do anything for the next 1 month all the way till today. So I would say this is not bad news. On the Nifty, we saw a very large rally. The index ended 100 points higher. And I think if you're looking at upsides, it's clearly last Friday's high. By the way, it's also the second touch point on a downward sloping. It's a small trend line, downward sloping channel. It coincides with Friday's high, which is 18,665. That's the first level to take out on the upside. It's about 60 points away. The 20-day perhaps should provide some support. That's also moved up as of yesterday's close. That stands at about 18,514. I mean, as we've been saying, no point chasing moves if the market opens, in a very significantly positive way. Better to wait for dips. On the Bank Nifty, which clearly is the stronger of the two indices, I think, and by the way, that's a new all-time high. The support lies at 43,582. And of course, in this space, the PSU Bank Index is what is really attracting all of the attention. Huge, wild moves, and I think we'll discuss more on that in a bit from now. Guys, hi.
Hi, and it's going to be a very strong start to trade, right? I mean, the SGX Nifty is now up over 100 points. What really stood out for me is the FI buying, which has come back after 6 days of selling, and gross buying has also picked up substantially. So yesterday there was FIs buying about 620 odd crores, and the gross buying on an average daily gross buying has now risen to 9,600 crores, versus about 7,000 crores in the last 6 sessions. So FIs are coming back. This is the highest buying that we've seen in December so far. So that's the big positive for me. The other thing, of course, all eyes will be on the US FOMC, but I guess the US Fed will now be one step closer to halting interest rate hikes after the cooling off of inflation. That's the interpretation that most market men have made, and that leads us to the question of whether the Nifty breaks out of this range, 18,400 to 18,800. Is this ammunition enough for the Nifty to break out of this range? Just a couple of more things. Brent crude is now back above $80 a barrel, so the dollar has slumped because of slowing inflation. So just keep an eye out on that internal. And in terms of corporate action, I'm going to be watching out for Paytm very closely. There could be a bit of a disappointment after the amount of the buyback was announced yesterday to the tune of 850 crores. More on that in a bit, but the market will now look ahead and look more at earnings and whether there is any sustainable pickup in the earnings trajectory for Paytm. So lots to talk about today, but I think the headline is that the market is going to score a big goal, similar to what perhaps Argentina did yesterday. But what are you tracking this morning?
Well, just to underscore that point about the FI flows turning. Last week, the FI outflows or the selling in the cash market was more than 1,000 crores. That dwindled down to a sell figure of about 150 odd crores over the last 2 trading sessions. And yesterday, we had an inflow of 620 crores. So that's a big positive. The FI flows have turned decisively. Also, remember, this is the last big week of economic data. Today, in the Indian markets, we'll watch the WPI at 12 p.m., then the FOMC decision at 11:30 p.m., and then tomorrow it will be the Bank of England and the ECB decision. But after that, it's going to be very quiet into the year, and in terms of news flow, no big macroeconomic data is awaited. And in terms of stocks and sectors to watch, do watch out for IT. IT showed a rebound yesterday after 7 days of selling. Yesterday as well, NASDAQ was up close to about 1%, so there could be the rub-off impact in IT. And even the Infosys as well as Wipro ADR, both of them were up about 1 to 2%. Some rally fizzled by the close of trade for the ADRs in the US, but there could be the rub-off impact in Indian IT, and that rally could extend itself.
Also in the F&O space, there's a lot of action in the Nifty Bank as well, and the Nifty Bank once again hit a record high yesterday. So do keep an eye out on that. Let's get you some market opinion as well. First up, a view coming in from Eric Fishwick of CLSA, who says that the US inflation was lower than expected. However, there is nothing here to dissuade the Fed from moving to a smaller tightening increment. He also does not think that the data means that the Fed will stop in December or even in February. He expects more clarity in the Fed's guidance and Fed Chair Powell's press conference. As of now, CLSA is retaining a forecast of a terminal rate of 5.25%, with rates kept at this level to end 2023. Expectations for an early reversal of tightening strengthened after the inflation release, which according to Eric is excessive given the tone of the Fed's commentary thus far.
Let's get you some money market views then. On the rupee, Kunal Sudhani of Shinhan Bank says the dollar index and the US Treasury yields dropped on the back of the US CPI coming in below expectations. Oil has moved higher with the OPEC trimming its forecast for demand. Also, Fed policy is due today with expectations of a 50 basis points rate hike. But the tone for the coming policies remain important to watch after lower CPI for November. For the rupee, Kunal says 82.15 acts as a support, while 82.75 is the resistance.
And on the bonds, Neeraj Gambhir of Axis Bank says the market traded in a narrow range of 7.25 to 7.32% despite a slightly hawkish MPC and better than expected inflation print. For the rest of the week, the US CPI and FOMC will give further guidance to the rate trajectory. For the week, the benchmark 10-year yield is expected to trade in a range of 7.2 to 7.35%.
Okay, we have lots of stock-specific action to track today, and we'll get to it in just a bit in our special Top 10 segment. The stocks we'll be talking about are Paytm, Bank of Baroda, TVS Motor, IFB Industries, Patel Engineering, Ultratech Cement, and Adani Transmission. These are, of course, things we're watching on the back of positive news flow. And Bayer Crop Science, IIFL Wealth Management, and Reliance Infrastructure are stocks which we will watch on the other side in terms of negative news flow as well. Well, let's get you some important opinion now coming in from former Fed Vice Chair Roger Ferguson, former US Treasury Secretary, and Jacob Liu and Wharton School's Jeremy Siegel. This is, of course, around the softer inflation and the FOMC later. Listen in.
I think for the upcoming meeting over the next day or two, it's going to be a 50 basis point tightening. It's been signaled, and I don't think this number is going to change anything. in that regard. And in part, think about it, it starts with a 7 handle. When they talk about inflation getting down to 2, there's a long way to go. Having said that, I think what is going to be at play is what do the next 2 or 3 or 4 meetings look like? 25 basis points at the next 1 or 2, 25 basis points at the next 3 or 4. And I think the inflation picture that's starting to shape up will have an impact on those meetings that are further out, which obviously will also be important to market expectations.
It's going to take a while to know exactly where we are and whether or not things are settling down to a place that's going to get back to where we need to be on inflation. So I think all of the market speculation about is the Fed going to move quickly, to me, is premature. I don't think the Fed's going to change its course. I think they've signaled broadly they're going to do 50 points this week. I think they're going to hang tough until they're sure that inflation is coming down into a safe zone. And that's going to take a long time. It's not going to take a week or a month. It's going to take many months.
If the Fed stops looking at stale housing data, and I don't know why they don't, they would actually realize that inflation is, as I said a month ago, over. Now, whether they recognize that, I don't really know. I already think they're in overly restrictive territory. I think this should be the last hike. I actually think that they will see data early next year that will prompt them not to do any increases. The next discussion of the Fed is, when should we lower rate?
I mean, that is emphatic, right? But very different opinion. Two saying, well, Fed most likely will stay cautious till they see data coming off and not to take the foot off the pedal. And the last one, saying the next discussion after this one is going to be perhaps when to start cutting. Robert Sokin is global economist at Citi. He's joining us right now to take some questions. Robert, great to have you with us here. Thank you very much for your time. So are you would you side with that last view that maybe now things are, the Fed will see the softer inflation and, indicate a downshift and perhaps a pause early next year? What's your sense?
Well, thanks so much for having me. And I think for the Fed, you really have to look at the universe of inflation data that we've had over the last several weeks. And to me, that universe still paints a very mixed picture. On the one hand, you had core goods inflation coming better than expected today. That's 2 months in a row of fairly good core CPI prints. You also had data from the New York Fed on inflation expectations that showed broad-based month-over-month improvement. So on that side of the ledger, you're seeing some progress on the inflation front. But on the other hand, if you break up, I think it's useful to break up today's core inflation data into 3 categories: core goods, shelter services, and non-shelter based services. On the core goods side, you're seeing a lot of improvement. That's really been driven by supply chains easing over the last several months. And you have very much reasons to think that that's going to continue. On the services shelter side, those numbers are still running hot. But if you look at alternative measures of rental prices, if you look at the softness in the housing market, you can be pretty confident that those data are going to start to improve next year. It's that third bucket where the real risk is and where the real uncertainty is. And for me, there's still a fair amount of upside risk in that non-shelter services category. Overall, the number was pretty good today, but you still have a lot of categories like education, recreation that are running at very hot inflation rates. And that non-shelter services bucket tends to be very tightly tied to the labor market and very tightly tied to wage growth, because wages tend to be a large portion of these businesses' costs. When wages are rising, they tend to pass those on to consumers. And if you look at the Atlanta Fed wage tracker that came out last week, which is one of the better measures of wages that we have, it showed very broad-based wage pressures across industries with very little, if any, sign of subsiding. So I think if you're the Fed, you still have to be worried about upside risk to those non-shelter services. And so I would lean more on the Fed still needs to strike a hawkish tone tomorrow, given the upside risk to inflation, particularly in these non-shelter service categories.
Okay, so there's a hawkish tone coming up tomorrow along with a 50 basis points rate hike. Robert, good morning. I guess this is something that global equity markets or risky assets have already priced in. The big question is, what is the way forward post the policy tomorrow? Do you think it's fair to assume that the Fed may be one step closer to halting interest rate hikes or perhaps even switching to cuts? And eventually, that's something that can fuel equity markets. Your thoughts?
I think, as you said and others have said, tomorrow I think is fairly baked in, a 50 basis point hike that's been very well telegraphed. I still think they're going to lean hawkish tomorrow, and it's too soon to say whether they can start to think about pausing or starting to think about even cutting. I think what's clear is, and they've made this clear in their in recent Fed speak, is they want to slow down the pace of hikes. But I still think it's likely that they're not going to be committal on where the terminal rate and the risks around there are ultimately going to go. I think the dots tomorrow are going to still show a 50 basis point increase relative to September, so it's going to be above 5%. And I think they're still going to say that there are risks there that could go even higher than that. There are also risks that could go lower. It depends on how the data evolve. But I think in terms of thinking about whether they're going to stop after the next hike, I think it's too soon to say. I also think that once they get to that terminal rate, whether it's under 5, whether it's above 5, I think one thing that's underappreciated is that they intend to hold that rate there for a material period of time. So in our baseline forecast, we have them going to 5.25 to 5.5 next year, and then holding that rate throughout the entire year because they're really going to want to see continued progress on inflation moving back to target. So, I think there's two debates here. How high are they going to go? I think there's still a lot of uncertainty around that, and how long they're going to hold the terminal rate. And I think the idea that they're going to start cutting very quickly is still premature at this stage.
So higher for longer, and your estimate is that the terminal rate goes all the way to 5.25 or perhaps even 5.5. Robert, morning. So what is your rate hike trajectory? The next policy is going to be in February. Do we continue to expect a 50 basis points, or can they bring it down to 25 basis points? And I know it's too soon to talk about a cut, but what about a pause? When do you think Fed can start pausing on rate hikes? Your own assessment.
Absolutely, yeah. So we have 50 basis points at the meeting tomorrow. We still have them doing another 50 basis points in February, and then followed by 225s for them, with the last hike being in May. I would say following this inflation data, the risks are that instead of doing another 50 in February, that they slow down the pace to 25. But that being said, I still think it's too soon to say whether they and when they're going to pause that hiking cycle once they get to 25 basis points, because they still have these upside inflation risks. They still need to see inflation moving decisively to target. And so I think relative to our call, I'd say there's a good chance that they slow down to 25 in February as opposed to the 50 in our base case. But I'm still pretty comfortable, given these risks I mentioned around inflation, that they likely have to move above 5 and likely, 5.25 to 5.5 range. So I think this inflation data, if anything, puts the risk on the table that they slow down again after this meeting. But I still think the risks are that they, keep going with hikes into the middle of next year.
Okay, we will let you go on that note. It was a pleasure speaking with you, Robert. Do join us yet again in the near future on CNBC TV18. We'd love to host you. Thanks a lot for joining in. Well, that's the global economist at Citi saying tomorrow is a given. There's a 50 basis points rate hike coming in from the Fed, but the Fed's hawkish tone may continue because they won't let the ball drop when it comes to targeting inflation. Let us do one thing now. Let's slip into a quick break. On the other side, our entire team will be with us to help us prep for the day. Stay tuned.
अरमान पूरा करे एक नाम श्री राम लाना ले जाना बेचना खरीदना कमाना बचाना सलाह पाना गोरखपुर जोधपुर तिरुपुर एग्मूर गोवा पटना दिल्ली हावड़ा श्री राम के साथ आगे बढ़ना श्री राम फाइनेंस लिमिटेड आपकी प्रगति का साथी।
लड़की होने का मतलब ये नहीं कि बंदिशों से दोस्ती कर लो। कामयाबी हौसला देखती है, जेंडर नहीं। इसलिए लाइफ तुम्हारी, रूल्स भी तुम्हारे।
सिग्नेचर ग्लोबल आपके इसी अंदाज को सल्यूट करता है। इंडिपेंडेंट फ्लोज फॉर द इंडिपेंडेंट यू।
इस सुपरफास्ट जमाने में कार इंश्योरेंस क्लेम का स्ट्रेस क्यों? एक्को ऐप पे क्लेम सेटलमेंट सुपरफास्ट होता है।
Get super fast claim settlement. Acko, welcome change.
Avance Holding Limited, a globally diversified financial services company with offices in 6 countries, launches its IPO comprising of fresh equity and offer for sale. Public issue opens on 12 December 2022. Public issue closes on 15 December 2022. For risk factors and other details, refer to the RHP. Available on the websites of the company, SEBI and the BRLM.
क्या हुआ चैंपियन?
दिन रात प्रैक्टिस करनी पड़ती है। यहाँ तो रात को स्टेडियम ही बंद हो जाता है।
एक काम करो ना, चेन छोड़ छोड़ के लगाना।
पापा
अब करो दिन रात प्रैक्टिस। चैंपियन।
एक्स्ट्रा सेफ पॉलीकैब ग्रीन वायर आपके सपनों को रखे सेफ।
Your health is our concern. Choose network or appropriate hospital. Our telemedicine and customer care team are available to guide you. Star Health Insurance, always at your doorstep.
Well, the SGX Nifty is suggesting it's going to be a party on the Lal Street early this morning, up about 111 points. There are many things to cheer, actually. Inflation has cooled off, lower than expectations in the US. Back home, you have FIs buying after many days. So let's see whether we can break out of that range of 18,400 to 18,800. That's the big question. In all likelihood, we will, given that there is positive momentum today. But Paytm is the stock on our radar. The buyback announcement has finally come through. Abhishek is here with us. Abhishek, for good or bad reasons, Paytm refuses to get out of the news. But tell us, what's the detail on the buyback?
Well, Sonia, to begin with, they have announced a buyback of 850 crore, which works out to about 10.24% of the IPO proceeds that the company had received, and about 9.26% of the cash and cash equivalent in the balance sheet, which is close to about 9,200 crores. So the maximum price for buyback that they have set is about 810 per share, which is a steep discount of more than 62% to the IPO price of 2,150 per share that they had a little more than a year ago. So the buyback is for 1.62% of the equity. The minimum buyback that they will do is about 425 crore, which works out to about 50% of the total offer that they have in terms of the buyback. The method that they have opted is open market and not the tender offer. This will be completed in 6 months time frame, and the total cost, including all the expenses that they have to bear, will be about 1,048 crores. Back to you.
All right, that's Paytm for you. Maybe a little underwhelming, right? I mean, what one would have thought the size would be, etc. Maybe the route as well, but we'll see. 540 odd is where Paytm closed yesterday. Now, Abhishek, back to you for Bank of Baroda. What's the news flow?
Well, over there, the board has approved, or the bank has actually approved, the divestment of holding that they have in Nainital Bank, roughly about 3,500 crore of loans, 11.5% in terms of gross NPA, and about 3 to 4% in terms of net NPA. So they will seek bids for Nainital Bank. The stake is about 98.57%. I just did a rough calculation based on the net worth. They could get about anywhere between 1 to 1.25 rupees per share in terms of the stake sale if they do over there. Back to you.
Thank you very much for that. Let's get to Vahishta. She's going to tell us about some other stocks which are in the news. Vahishta?
Hi, Reema. Good morning. Let me start with Bayer Crop Sciences, when the company has discontinued their operations at their formulations plant in Himatnagar, Gujarat. This is with effect from the 12th of December under the directions of the Gujarat Pollution Control Board. As of now, no monetary penalty has been imposed on the company. Moving on to TVS Motors, when the company has announced their initiatives to introduce Euro 5 compliant two-wheelers for their Turkey customers, and TVS Motor awaits the approval from the European Union Once the prototype product approval of the European Union is received, the company will introduce the Euro 5 two-wheelers in Turkey, and with this TVS Motor will further strengthen its presence in Turkey with products like TVS Jupiter and much more. IFB Industries has approved the investment of up to 97 crores in IFB refrigeration, which comes in 2 tranches. Now this acquisition is expected to be completed by March 2023. The company is a promoter group company which was incorporated in March 2021, for which the 85% civil work has been completed and commercial production will start in April 2023. And the last stock is Patel Engineering, wherein there's going to be a board meeting on the 16th of December to consider fundraise via the rights issue mode. Back to you.
Okay, thanks a lot for that. Well, Vivek is also standing by to give us some more stocks that are in the news. Vivek, what do you have for us this morning?
Well, good morning. Quite a few stocks on the radar. First on our list is Ultratech Cement. The company has gone ahead and commissioned a 1.9 million tons per annum capacity. This is a greenfield clinker bag, capacity in Rajasthan, taking the company's total capacity in the state of Rajasthan to a little over 16 million tons per annum. Now, this consolidates Ultratech's position as India's top cement company in terms of capacity, with its total capacity now standing over 121 million tons per annum. The other stock on the radar is Adani Transmission, entering into a new line of business. The company has gone ahead and incorporated a subsidiary by the name of Adani Cooling Solutions. This particular company will perform district cooling system business for corporates. Also keep an eye out for IIFL Wealth Management. Now, yesterday there was a large block deal of a little over 3% stake of the total company. Now, General Atlantic, that held over 20% stake in the company at the end of the September quarter, has pared its stake, and the buyer yesterday was Capital Income Builder Group. Lastly, Rail Infra, some red expected on the stock. A court case of arbitration proceeding has gone against the company. A Singapore court has ruled against the company in the Shanghai Electric arbitration case, and the court has asked the company to make a payment of over 1,200 crore. Company will challenge these proceedings as well.
Thank you very much for that. Another stock you should look at is Affle. There is a board meeting today where they will consider some fundraising. They're proposing to issue some securities with which they'll raise some money for their inorganic plans. Here's a quick recap of the top stocks this Wednesday morning. Stocks with positive news flow are Bank of Baroda, TVS Motors, IFB Industries, Patel Engineering, Ultratech Cement and Adani Transmission. Stocks with negative news flow are Paytm, Bayer Crop Science, IIFL Wealth Management and Reliance Infrastructure.
Okay, well, we're also tracking what's happening in the world of crude, and over there, Brent crude is back above $80 a barrel because of a rising demand situation. Manisha Gupta is here to give us more on that. Manisha, back at 80?
Oh, well, it is, and 4% of gains overnight, 3% up on Monday. A couple of sessions clearly have seen a lot of run-up in case of the crude oil prices. Well, softer than expected U.S. inflation data has been the latest trigger. Yesterday, the prices ran up because the Keystone pipeline from Canada to U.S. will remain shut for next few weeks, is what the officials are now telling us. So supply concerns, China reopening optimism, dollar index now back below 105 are some of the factors that are keeping the crude oil prices on a firmer note. Similarly, natural gas prices also have run up by nearly 23% in last 3 trading sessions. Everything in metals also doing quite well. You have copper now trading at a 6-month high, iron ore prices at a 4-month high, silver is trading at an 8-month high. So the weakness in US dollar and the weaker inflation rate are clearly doing the trick.
Welcome back. Most of Asia is positive this morning. The Taiwanese markets up 1%, the Korean markets up 0.7%, the Japanese markets up 0.6%. Hang Seng, after the phenomenal rally that we've seen since, I think, the 31st of October, which is when the Hang Seng market had hit a 52-week low. And since then, we've seen that index rebound more than 25-30%. Today, it's a bit soft. The SGX Nifty, as we've been highlighting, is suggesting a positive start. Remember, yesterday, towards the close of trade as well, the markets rallied. So it looks like we could build on the momentum. But just bear in mind, the US markets, though they did finish in the green, the rally fizzled by the close of trade. At one point of time, the Dow was up 700 points. It dipped into the red, was lower by 60 points, and it finally ended up only 100 points. So the US markets ended in the green, but as I said, the rally did fizzle out, and the picture was a little different by the close of trade. But what's the outlook for the Indian markets? Here's a word from Mahesh Patil, CIO at Aditya Birla Sun Life AMC, on his view on the markets, the best sectors to approach right now and track.
We have been a bit cautious on the market here, though nothing wrong in terms of the fundamentals. I think the overall outlook on India looks fairly good. We have seen a decent amount of recovery over here. Demand has been fairly strong. And rural economy is also picking up, which is giving legs to the consumption, which was kind of weak last year. And there has been a steady pickup in the investment side also. So all in all, I think the outlook on India looks fairly strong and robust. The relative valuations where India is vis-a-vis the rest of the world, and especially the emerging markets. And to that extent, I think we've seen that recently there has been some amount of trade where money has moved into China, Korea, Taiwan, which were kind of beaten down and valuations were looking very attractive. So relatively, we've seen some flows there from the FIS side. Overall, I think we're still fairly positive on a, say, next 2 to 3 year perspective. We see earnings growth in the region of around 13 to 15% CAGR over the next 3 years. And market should give reasonable returns from here.
Okay, well, market will give reasonable returns from here. It's already at a record high, so perhaps there is more to go on the upside. Sanjeev Bhasin is joining in to give us more on what he's made of all the action so far and the way forward. Sanjeev, hi, good morning. I know you're going to remind me about that Bhangra. I remember that we have to do it. And I mean, bulls have been doing the Bhangra for a goodish bit, right? You think it's going to continue?
Yeah, good morning, Sonia. So you were the one who was naughty enough to say, when will we see you dance? And you were sniggling inside that, well, you know, how I made a fool of myself by the first time.
I never said that. Sanjeev, I never said that.
You will have to join me. So I am coming to Bombay. And then when we cross 19,000, which may be today or tomorrow, we will do the Bhangra. But you have to join me.
Done. Of course. Anything. Anything for you, Sanjeev. But, you know, I mean, it's interesting, right? This is a time when the markets are at record highs, but there's still a little bit of this FOMO feeling. Retail participation is perhaps not reached that exuberance level. Would you agree? And what is the way forward now?
So, Sonia, 3 points. Look, I have been, last 16 weeks, every Saturday, Sunday, I travel, Saturday and Friday, Saturday, across the length and breadth. That's my job. But can you believe that how the retail investor has actually put his money where his mouth is? And take it with a pinch of salt. Who are the dumb guys in this? The ones who sold aggressively at 15.5 and were touting all about 14,000. So greed and fear has played out perfectly. India has been an outlier. Our demographic premium is played to the hilt. We are an expensive market, Sonia, make no bones about that, because of the retail flows, and will continue to remain so. So the idea is that, you miss the woods for the trees, that the villains of last 5 years, particularly PSU banks and the whole lot, have been the darlings of this year. So stocks, rotation has been sharp. If you haven't been able to rotate from Infosys to ICICI, and so on. But like you said, India is an outlier, and now with inflation and other things moderating globally, I am very, very sure the dollar is going to get weaker as we pass through the time. And that will mean that the emerging market basket will be one of the most sought after. Now, in that basket, you will have China, which will get its share and so on. But I still think that there is an upside. And we will see this correction if it comes, closer to the budget or middle of January. That is when we would be taking some money off the table. We are seeing rotation and we are booking profits in the banks, which we have been exceptionally bullish and which have done, by God's grace, one of the best times in the last 5 years.
Sanjeev, hi, good morning. By the way, Rima is also with us here, and I think Rima did do some Bhangra, from what I remember. Rima? I remember this.
I would love to see that. We may have a repeat performance.
Sanjeev, last time we spoke, you were saying that after sort of greed and fear, right? After such a sharp run-up, maybe time to book profits where you made a lot of gains, etc. So that is still the mindset, broadly?
Yes. Good morning, Prashant. Firstly, Rima and you did a very pathetic recast of the Bhangra. I'll come and tell you more about it. I know it's not Sanjeev, your pattern.
Sanjeev, I didn't even try, yaar.
That's why it's pathetic.
I just sat
you
still while...
You just egged the other people to do it.
Just joking, Prashant. You are a gentleman to the core. From, you know, that 15 years I have known you, I have never seen a better anchor or a gentleman like you. Firstly, that's credit to you.
Thank you,
Secondly,
sir.
you put all your money in the backwaters of Kerala in real estate, so you have no qualms
There
about
you
the
go
market.
again.
And thirdly, BL Kashyap from 24 is up to 40 rupees,
Yes, yes,
which we
yes.
said,
I was
which I
wondering when you
told
would
him, you
bring
are a
that up.
darling. So you know, next time when we are here, maybe it's past 60 rupees. Now, Prashant,
Yeah.
you are right. I am taking money off the table. I am going for a holiday and I am not making any bones about chasing PSUs now. This is the time to take your money off and put it into select stocks where we think there is a lot of still upside. But like you said, the rotation is there. Don't get sucked in by the greed. But, you know, this is all conventional wisdom. Nobody can buy at 16,000 and nobody can sell at 18.5 or maybe 19,000. So be prudent, invest in something which we always say, some of your SIPs, some of your fund managers, because this is where you need a little bit of guidance and experience.
Let's get to some stocks then, right? Talking about investing, how does Dr. Lal Path Labs look? Yesterday, the stock was under pressure because of news about how the free testing by the Delhi government in many of these government-owned centers, etc. What impact, according to you, on Dr. Lal's? Today, UBS says that the company derives about 20 to 25% of its revenue from Delhi. But it's a very different customer set, and therefore they don't see the financials of Dr. Lal being impacted by this development. Your thoughts, and was yesterday's dip a buying opportunity?
Yeah, so Rima, look, the best of Dr. Lal and the, testing labs and all this was during COVID, and they made money hands over fist. I still think Dr. Lal's is run by a very, very, pedigreed management. The person himself and their team are very, very prudent. Like you said, this is going to be a constant foray of politics and, corporate governance and issues which are always there. Not corporate governance, but corporates being exposed to that. I still think it's a pedigree stock. Now, there is enough menu on the cards which can make more money than that. So why would people go into a defensive like pharma unless they want to, be more, like I said, defensive? I would give it a pass through. I would not chase the stock because there are enough ideas where you are making money. PNB has doubled or 50% in the last 1 month. Union Bank has doubled. So people are going to be more prudent on the high beta sector of the market, which makes money in the faster term. In the longer term, maybe this is a buying opportunity, given that the management has been pedigree and you don't have such type of a brand which is there pan-India.
Okay, we want to talk a little bit about some of these new listings as well, Sanjeev, and wanted your views here. We have, in fact, a management joining us. The newly listed Fusion Microfinance stock has been on a tear. It's seen a 21% up move ever since November 15th when it made its debut on the bourses. To discuss the outlook for the business, we are joined by Devesh Sachdev, the Managing Director and CEO at Fusion Microfinance. Devesh, thanks a lot for joining us. I remember we had a chat with you during the time of your listing, and you did mention at that time that you're not aggressively looking to gain market share and you're moving more towards secured loans. So tell us a little bit about what the growth trajectory would look like, not for this year, not for FY23. I'm just asking you a little bit if you can give us, a bird's eye view of both the industry as well as the growth plans for Fusion Microfinance.
Good morning, Sonia. Sonia, if I remember correctly, what I said was that we will not be aggressive in terms of only, talking about market share. We will be very calibrated in our growth. MSME is a very small, it's around 2.5% of our total overall my portfolio. So we are very calibrated. We want to grow that, but we are very focused on microfinance as our core business and where we see a good potential. Some of the trends I can tell you is the fact that now the pangs of COVID are behind. The growth is back. We are seeing a good uptick of the demand. In our H1, we have done close to 4,000 crore of disbursement. So we are seeing a good uptick. The new regulations have been put in place where you need to do a credit assessment at household level. And I'm very hopeful that this will further increase the sustainability of the clients and whatever arbitrage, whatever, some distortion which was there in the sector where the rules were only applicable on NBS MFI, will make sure that the sector will grow at a more sustainable level. and the client-owned indebtedness will be controlled. So that's my initial comment.
Devesh, morning. Now, you provide financial services to the unserved and underserved women in rural areas. Now, the rural markets, the economy has been under stress. Inflation is hurting households, and women are may not be the primary breadwinner, but inflation does hurt. So, does this cautious macro outlook on the rural economy hurt the prospects of Fusion Microfinance? Just can you talk about the next 6 months? What is it that you're seeing on the ground, and how this macro outlook impacts them and their plans?
So if you see in their overall, spending basket, crude is not a very big element. So one of the big driver of inflation has been the crude. That's the first point. The second point is the fact that most of our, customers are in essential services. Suppose she's selling milk. Milk prices go up. So it's actually nullified whatever earning. So we are not seeing, that kind of impact as far as the inflation is concerned. And now I think the new numbers are showing that inflation, hopefully, will be under control. So we are not seeing any such impact, and customers are, as I mentioned, the demand is up. People are coming out of COVID. They want to start new enterprise, or they want to really augment their existing enterprises. So we are seeing a very good demand for credit in the rural areas.
Devesh, hi. Good morning. It's widely acknowledged by economists, people who watch the economy, that the lower end of the population is hurting, right? This is where, of course, not just you, but all microfinance works in. The revival there is very, very slow. Now, that is born through data. I mean, if you were to pass through the recently announced GDP numbers or other high-frequency data points, etc., as well. So how does, you've been, the company has been around for 10 years, right? In the MFI business. How has business performed during these kind of phases? Do you see a slowdown? And of course, at the same time, hopefully rates are at a peak, but they're still rising. Your thoughts?
Yeah. Good morning, Prashant. Prashant, so from my own experience, so what we see is that, especially with this customer segment where we operate, they get impacted more by local events. They get impacted if suppose there's a flood, there's a COVID. They get more impacted, Prashant, when they are not able to really go for their daily livelihood and not able to earn. I think that is a more impact, makes more impact on them rather than, macro environments like, I'm not trying to say that inflation doesn't make an impact. But I'm saying, especially crude is not part of their overall spending basket. And then they are into essential services. Whatever they sell, they get better price, so it gets nullified. So if you see whether it is, I can take you back to 2008, though we started just after that, but I was looking at the microfinance sector at that point of time, I was traveling in the field. There was no impact. And you see 2010, there's one big IPO happened, the first IPO in the microfinance space. This was just after in between the great the economic recession. So my view is that this class has shown huge resilience. It is also helped by a lot of work which has done by the government through DBT, all other support which has gone to this segment. So I think it's a combination of all these factors. We are seeing that this is a huge, this class is a segment is a very, very resilient, and they really are wanting to come back. And that is clearly being visible in the kind of demand we are getting in the credit.
Okay, we have run out of time, but not out of questions. Mr. Sanjeev, thanks a lot for joining in and speaking to CNBC-TV18. It was a pleasure having you on the channel. Sanjeev Bhasin is still sitting by with us. Sanjeev, this stock has done pretty well for itself. I mean, it's up over 20% since listing. But, these are pockets that, as Prashant was also pointing out, these are vulnerable pockets, right, that they're catering to, and pockets that have not recovered just yet. You think you would be a bit cautious here, or would you go in for this one?
So, Sonia, I will not be able to discuss this. This was something on which our merchant banking team had an issue. So I will not be able to, as a compliance, speak about it. It's a new listing and give it more color. I can speak about some stocks which I think are very, very prudent. I'll skip this one.
Sure. Please go ahead. Which are the stocks that you think, could be I mean, multi-bagger is the wrong word to use these days, but it could be wealth creators, say, over the next couple of years?
Well, the first is one of the largest players, Tata Power. Now, look, I did a conference call a week back, and you'll be amazed, Tata Power is not only one of the largest players as far as the EV stations goes. It has just acquired the Discom about a year back of Odisha. Thirdly, are you aware that in defense we talk of L&T and Bharat Force? Tata Power has more order flows. There are 30 airfields which are shifting to Andaman, and now with defense being a prerogative, that is all naval and air force. All that is being set up by Tata Power, which is almost a $500 million order flow. And as our defense needs become more and make in India, can you believe the lion's share of the business is Tata Power? Thirdly, it's an expensive stock and it has been there in my portfolio from 50 rupees. But I think, Sonia, by 31st January, you will see a new high in Tata Power. And if you have a 2-year window, this stock is going to 400. In solar panels and PVs, we think Tata Power and SW Solar are the only plays in India with prices now cheaper than China. India is going to be the lowest cost producer, and there is so much of visibility as far as environment, climate, green hydrogen that you cannot but ignore the stock. So Tata Power is also in a very, very close base where it has very, very strong support. I think a 25% upside is easily there before the budget on this stock. Second would be Motherson Sumi. Look, the euro has stabilized with a bang against the dollar. Dollar has topped out. And we see that Motherson, which is one of the largest global OEMs, is expanding base in Algeria and others. They've got a very big in-house contract from Boeing. And as we see the advent of more planes, they have diversified their ascent into even aerospace and airlines. They've got a very big order from Boeing. Motherson has been an underperformer, but I'm very bullish on OEMs like Bosch and Motherson. And I think Europe will be the next kicker in the next 2 years, as after these 3-4 months, they get back. And autos is something which everyone is raging for. Third would be a stock like Canfin Homes, where the management is indicated by the end of this month, the new external CEO will be in place. The order book is going to double in the second half. NIMs are at the lowest in the industry, third largest ticket builder in the ticket size from 15 to 30. You cannot but make money in these 3 stocks. Canfin is targeted to be 750. I have upgraded this stock to 850 rupees. And I think that you'll make hands over fist over a period of time. Plus, these 3 names give you a relative, safety at 19,000, where you're not chasing only value, you're chasing growth along with value with a pedigree management.
Okay, Sanjeev, it's a pleasure. By the way, you said take money off PSU banks. Or was it PSUs or PSU banks because of after the rally we've seen?
PSU banks, read my lips, take your money home, don't chase them now. Okay. There has been enough of plethora. And yes Bank has almost doubled. We own some of those stocks which are there in the longer term. Right. But on our trading book, we have the reduced position substantially. We are taking home money. Okay. We are investing in these 3 stocks, as we told you, Prashant. Right. And next we will chat when we do the Bhangra with you, and we'll give you more ideas. Wish you all a very, very happy and a prosperous new year. And God bless.
You too, Sanjeev, from all of us here. Thank you very much for being here with us. By the way, I was asking about PSU banks because I've got an interesting data piece coming up on PSU banks, and that's a little later in about 10 minutes or so. So.
Welcome back. It looks like it's going to be a good start for our markets, up close to about 0.5%. Remember, towards the end of yesterday's trading session, there was that upside momentum in our markets, which could extend today. So what's the best way to approach trades? Sudarshan Sakhani and Mitesh Thakkar now join in. Good morning, gentlemen, and thank you very much for joining in. Sudarshan, first call on the Nifty. What is it that you're observing?
You asking me?
Good morning, and the Nifty call.
Well, I think the Nifty is still a buying opportunity. Yesterday, I had said in the morning, go and buy the Nifty. That trade has worked rather well. And we are also seeing a gap up that helps our trade. Now, if you have long positions from yesterday, I would suggest you take profits today morning at the gap up. And then wait patiently for an intraday sharp dip. If we get an intraday dip towards 18,600 close by, which is yesterday's close, then the Nifty becomes a buying opportunity for the day. Otherwise, bank your profits and stay away. The Nifty is a buy only on a sharp dip. The Bank Nifty is a different story. It can be bought into even on small intraday dips because I think there is some more outperformance there. But both indices are to be bought into on dips.
Okay, both indices buy on dips. Mitesh Thakkar is also with us. Mitesh, the big question that I have is this market moving out of its range? And if yes, is this a good time to go long?
Morning, Sonia. The initial understanding is that one, the pullback seems to be over, and therefore it is very likely that a retest for a cross of the earlier high should happen. So in that sense, I think I would say the odds are stacked in favor of us eventually moving out. Though I think at 18,750, some profit booking might happen, that intraday volatility might happen. We took a long yesterday late afternoon around 2:30 to 40 times, and I think today, as Sudarshan was also suggesting, a good idea would be to trail your stop losses close to yesterday's closing area or levels of around 18,600. And if we start getting past 18,700, 720 zone, then I think we are looking for an immediate test, or possibly even a cross of 18,850, 880 zones, which was the earlier high. So at least a retest looks very likely. So I would maintain long positions. Trade your stop losses on positions which have been taken, and the bank nifty could be a helping factor given the fact that it's already making new highs. And we had penciled in targets of 44,400. I think we can even revise them in the short term to about 44,750 on the upside.
Okay, what about individual stocks? What are we looking at this morning? Considering you spoke about the bank nifty, you think banks will continue to rule the roost, Mitesh? And what are the stocks to look at?
I think banks should do well. In fact, I have 3 financial names on my list today. IndusInd Bank is a buy with a stop at 1220, targets of 1265. Bajaj Finance, after a long time, is featuring on the buy side. Keep a stop loss at 65.80. 64.80. Look for targets of 66.15 on the upside. LIC Housing Finance is a buy with a stop at 405 for targets of 424. And ONGC is the final call. Buy with a stop below 142.5 for targets of 150.
Okay, so 3 in the financial space and 1 ONGC, but all long calls for Mitesh. Sudarshan, what would your stock recommendations be?
Well, Bajaj Auto is a buying opportunity. Now, the stock has underperformed, but it is possible that this underperformance may be coming to an end. So, buy with a stop under 35.80. Havells is my only intraday short. It has come in my intraday short list earlier also. The stock keeps on falling for whatever reason. So, keep a stop at 11.85 and look for an intraday short. IDFC First Bank is a buying opportunity. I have already spoken about banks in general. So here is a stock that you could buy with a stop under 58. And as Mitesh is watching the same charts as I am, ONGC is also a buy for me with a stop under 140.
Okay, all right. We'll do one thing. We'll take a quick break on that note. On the other side of the break, we have the pre-opening rates. Also, the Paytm buyback. Did it disappoint? What's the way forward for the company? Digant Haria, co-founder at Green Edge Wealth, will join in to discuss the 850 crore buyback in just a bit. Stay tuned.